So yeah, I think ETH can go to 10,000 easily by the end of the year. Tom Lee is doing, you know, Satoshi's work going out there and proselytizing the unwashed masses about the bright future of Ethereum as held by the BitMine digital asset treasury company. So, he's red pilling an entire cohort of investors, which is great. I hope they keep buying stuff. But at the end of the day, right, the ETH story, ETH is still massively underperformed, given where a lot of other layer ones have been this cycle, and I think it's going to play catch up. I still like the price chart and fundamentals of Ethereum doing 10,000 by the end of the year.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show, which is the only place where one tweet from Trump wipes out more value than a recession. I'm your host, Jay Hamilton. It's Wednesday, October the 15th. Can anyone make sense of this market? Well, if anyone can, it's the one and only Arthur Hayes, who is in the studio joining us today with his predictions for Bitcoin and Ethereum for the rest of this year and so much more. He's the CIO of Maelstrom. He's the co-founder of BitMEX, and he's even has a pardon from the president. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking it away. It's also brought to you by Figure Markets. Grow your capital like a bank. No lockups, just real returns. With that, Arthur, welcome back to the show.
Thanks for having me.
Pleasure to have you, my man. Great to see you. Looking good as always. Okay, let's just start. How are you feeling right now? We're sitting here, mid-October. What happened, obviously, last week was not on my bingo card for this conversation this week. Has your view changed at all in terms of the market and the setup going into Q4? I know you've been bullish. Did what happened last week with tariffs and Trump and the trade war, did that change your view at all?
Didn't change my view at all. If anything, it confirmed my view of what's going to happen in terms of an extended period of time of up only for crypto. Obviously, people were taken aback by the Trump threat of 100% tariffs, which was preceded by China announcing some new RRE, rare earth restrictions. Obviously, both of these things come into effect after early November, when Trump and U.S. President Trump and Chinese President Xi are supposed to meet on the sidelines of, I forgot which, I think APEC conference in South Korea, something like that. And they're supposed to come up with some grand new bargain, right? And what do you do before you sit down and negotiate? You try to push the limits, right? So that when you come in below that, it's seen as a success. So obviously China goes full, oh no, any product coming out of China with our rare earths, we can sort of interdict, and that would essentially destroy the American economy because there is no America without China. And then Trump says, oh no, we're going to put 100% tariffs on China because that's the only tool they really have. And that's really going to hurt the Chinese economy, and employment's going to go down, and the exports are going to go down. They're going to really feel it. And so both sides are rattling their domestic markets with these very aggressive demands of the other side. And then obviously when they come and sit down and they come to whatever agreement they come to, even if it's a sham and it's just purely optics, it's going to look good for both people because, they both asked for something ridiculous. They both came back and could sell it to the domestic population that they got something pretty good. Mm-hmm. And that's it. And that's all there is to it. I think people, and then obviously the crypto reaction was very much a issue with how exchanges work, and just goes to the fact that no one actually knows what the fuck they're doing. They haven't read the documents. Like, I've been doing this for almost 12, 13 years. I wrote most of these documents that everyone else copied. No one read any of this shit. They didn't read it when I wrote it the first time. The exchanges barely read it when they copied it, and so now they don't fucking know what they're doing. Yeah, I'm more talking about the customers who don't understand what it is they're actually trading, and they find out, unfortunately, at a time like this when, everything collapses into one moment, and then unfortunately people lose a lot of money, which is really sad.
Can you? I agree with what you're saying, that most people don't understand. I myself don't even know if I fully understand. I'm willing to admit my ignorance here. Can you give us a little bit of a lesson? We don't need to dive super deep into the technicals, but at a basic level, what did happen last week, and what can crypto investors learn from that so maybe they protect themselves in the future?
Yeah, so I guess the big issue was cross collateral margining. this is a very difficult system to design and implement, and you have to make a lot of choices and policy choices about how you're going to mark different assets depending on the situation. And obviously, as a 24/7 exchange that operates 365, you have to put these in, put it in a technical spec and then just run with it. And then something happens and you adjust. And obviously, we've seen that Binance and some of the other large exchanges, they made some decisions about how they're going to mark certain types of collateral. Obviously, there was the issue with taking a last price from your own order book, which is less liquid than the global order book, which is what happened with Athena USDE, right? They did not depeg. Something like 100 million, or I forget how much money was dumped into the USDE market. It traded below $1, but if you looked on Curve, it barely moved, which is where most of the liquidity is. Unfortunately, Binance marks collateral in USDE based on its own order book, which is much less liquid than the global order book. And that started the whole thing. The whole sort of, if you had that collateral, then now you have to sell all these other things because you're underwater. And that just sort of leads to the cascade. So that's one issue, is how does an exchange mark an asset that it uses to collateralize another position? Because obviously Bitcoin only went down, like 20 grand, like 10, 15%. Not that big of a deal. We've done worse. I've experienced much worse in terms of, drawdowns in Bitcoin over a very short time period. But it was a fact that people were using other forms of collateral to back up their Bitcoin and Ethereum positions, that collateral was marked at an adversely bad price for them. The exchange didn't do anything wrong. This is all laid out in their specifications. Just no one took the time to read it. And maybe, the person in charge of the exchange team didn't particularly understand the ramifications of the decisions they were making in terms of the policy choices, but whatever, right? It was all there written down. You just had to read it and understand it. And then the second issue was automatic deleveraging, ADL. And especially for traders who like to trade basis positions, meaning they have what we call a delta neutral position. They have no exposure up or down on the market, but they aim to capture the spread. If on one leg of the trade where you're short, you're supposed to be making money. And on the other side of the trade where you're long, you're losing money. Now, the problem with an ADL is when that happens, basically the exchange is trying to protect itself. And it's saying that, hey, I know there's some people who have profit. There are people who have losses. The people who have losses don't have enough collateral or capital to make good on their losses. And so because it's a sum zero system, what is one user's loss is another user's gain, we're going to take from those who have profit to make sure that the exchange is flat. And so that buys and sells in the P&L equals zero. So that means if you have a long short position on the short side, you make less than you should, then all of a sudden you're underwater on your position and you've lost money because now you've lost your hedge. And couple that with the API issues because of overloads on Binance and some of the other exchanges, and now you have traders who cannot log in to see their positions, don't know if they've been auto deleveraged or not, can't add back on new risk because they can't contact the exchange quick enough, and all of a sudden the market gaps down, especially on some of these more liquid tokens, as all the market makers pull their liquidity. They're trying to protect yourself. And that's how a bunch of delta neutral traders blow up, because they don't understand how automatic deleveraging works in this sort of adverse scenario. So these two things basically led to, the gargantuan losses and liquidations and all the 20 billion or whatever the number is, the billions of capital and open interest that was essentially evaporated. And obviously Binance thought that they could have done things better. And so they launched some, I think, $300 million, $40 million fund to give people back some money. But obviously that's not really going to make good on everyone else who got smoked because they didn't understand what the fuck they were doing. But those are the two real issues. This is a very idiosyncratic crypto thing. It has very much to do with how do you structure a highly leveraged trading platform where the exchange does not face risk of loss due to customer highly leveraged trades, and understanding how these margining systems work, and understanding that sometimes under high load, the APIs don't work. And then this is the exact perfect moment when, people blow up. And so, yeah, it's very unfortunate. I hope people learned what ADL actually means, how the ranking systems work, who is eligible for ADL and who is not. Now, obviously, there's been a bit of a controversy around Athena. They were in their own defense, and obviously I'm an advisor, and I stumped for them. They did what they should do. They negotiated with the exchanges to not be ADL. I don't know what the terms of those agreements were, but Athena was able to capture the full P&L on the way down. to make sure that USDE was fully capitalized at all points along that curve when the prices were falling. That is what they should be doing. Now, whether or not the exchange should have offered them that protection over and above other users, that's a question a client should ask of Binance and Bybit and all these other exchanges. And that's up to them to make that decision. But from a Thesis perspective, they did exactly what they should do. And yes, the USDE price on Binance specifically was out of line, but they remained over collateralized throughout the whole incident. So again, understanding what an ADL is, understanding how socialized loss works, understanding the situations where the insurance fund kicks in or doesn't kick in, these are all things that you need to understand as a leverage trader. And I don't think many traders understood these things. They just pull up a chart, do some TA, slap on a high leverage, and hope that they're going to make money every day of the week. So again, unfortunate. I wish a lot of people hadn't had to learn this lesson, with billions of dollars of losses. But again, this is another lesson of understand what the fuck you're trading.
Mm-hmm, mm-hmm. So let's talk about the outcome for a minute, because you put out a tweet and you said, lots of alts got smoked on the move down. We won't be seeing those levels anytime soon on many high quality alts. What does that mean?
So I consider a high quality shitcoin real users paying real money, i.e. not the token in which of the platform. So they're spending, stables or Bitcoin or ETH, whatever, right? It's real money on a product or service. And then that token project takes that profit and does buybacks or emissions or some way gives that money back to the token holders. So obviously examples would be Pendle, examples, EtherFi, Athena. Obviously these are all things that I own in size in our portfolio. But again, I believe these are high quality shitcoins. These are real use cases. It's not that the exchange or the project has some agreement with a market maker and that's literally the only organic demand for this thing. And then they quote a nice little chart. And then when shit hits the fan, they're gone and there goes any liquidity in your token, right? And so I think there's some interesting posts about people saying, yes, we did some true price discovery this weekend because only high quality shit coins where there was actually a real reason for these things to exist, was there actually any liquidity because all the people who were paid to be there were protecting their own ass and were out. So that's the true price of that shit coin. Down 75 and 8%, whatever it is, right? So I think that, for high quality shit coins, you're not going to see these levels again. That was an amazing opportunity for those who had the ability to deploy capital into those liquidation wicks. And that'll be a, cycle defining moment in the same way that April 2025 was a cycle defining moment. Most people, if you got in at those lows, April 9th or whatever it was, you're still up today on most of the majors. And as subsequent to this, right? If you got in at Pendle $2, or I think Athena got down to like 10 cents or 15 cents, something like that, right? You're already up like 2-3x over those prices, right? So you're not coming back to those levels. This was a very perfect storm for how a bunch of people could get liquidated. There's going to be some changes in policies. Traders are going to reassess what it is they're trading, the amount of capital they're deploying, the leverage they're using, and selecting exchanges where the policies on ADL, insurance fund, all these sorts of things make sense with their own trading strategy.
So I want to get onto your macro overview and the market, but just one more question on this theme. My mind goes to the fact that this was started by one single post from Trump. And that is a possibility for the next 3 years. Do we need to be prepared for these types of events, or is the solution more what you're talking about of changes in policies and changes happening behind the scenes that make these types of liquidations not as possible and we don't need to worry? As an investor, how do you plan for the possibility of one tweet leading to a market crash?
I mean, if you're using leverage, then one tweet could lead to a market. What if Xi Jinping said, all bets are off, I'm invading Taiwan today? There's one tweet, goodbye, see you later, right? So again, it's not just Trump, it's any politician around the world can say something and that could get a market reaction, right? So anything can happen. And so if you're using leverage, that's the game. You have to be prepared for that and understand and how you're going to deal with these situations where you're not paying attention or whatever is going on in your life or your business. And All of a sudden something happens, the market reacts. What do you do? That's the game.
Welcome to it, right?
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Let's move on from that. What's your view right now? Let's start wide, and I want to narrow in on some specific topics. But talk to us about your macro overview, your thesis right now.
So I just finished writing an essay called, what was it called?
Long
on the
Live the
4-year
King.
cycle. Long Live the King, yeah. And it was on the 4-year cycle and why I don't believe we're in a particular, this cycle is not 4 years. Zooming out, if you listen to the politicians and the bankers, they want to do more things. They don't want to raise taxes. They don't want to cut spending. They want to do stuff. They want goodies. Everybody gets a prize. Nobody pays more taxes. We don't cut spending. We can do everything. We're the government. And so that's not changing. If you read the newspaper, pick your country, it's all the same sort of thing. They obviously are targeting different groups depending on their own political backdrop, but the message is the same. Goodies for this constituency, and it doesn't cost you anything. And so because the whole world is doing this, there's going to be more fiat created. It's going to accelerate in pace because you have to pay back the old debt with new debt to fund new spending and the old spending. And so exponentially, we go higher in terms of the amount of fiat created. And therefore, I'm very bullish on crypto. I think I posted a tweet overnight. Jerome Powell, this was not on my bingo card. I forgot what he was speaking at. He basically said they're going to be stopping quantitative tightening soon. And you had Timorous from the Wall Street Journal, which is essentially the mouthpiece of Powell when he can't actually say what he wants to say, telling the world that quantitative tightening is dead, which basically means it's over. So I'd imagine, one of the next 3 meetings, they stop quantitative tightening, and you can bet that quantitative easing is right around the corner because, Buffalo Bill Besant has got a lot of debt he's got to term out. And, even 4% on the 10-year is not low enough. They need it lower. They need mortgage rates lower. Trump says we're in a housing crisis in the United States. Yep. Right. House prices are over the 2008 levels, but it's a housing crisis, don't you know? And so got to print more money, and quantitative easing is coming back. And so, this just came out of nowhere. I don't know why he even got on this topic, but if this is what he's saying without any sort of prompting, imagine what they're really planning on doing once, they really get things going. And Trump's only been in office for a year, and he doesn't have all of his appointees and all the positions. Like the chess pieces are not all aligned yet. But starting in next year, we're going to see an acceleration of money printing, at least out of the United States. If QT's over, quantitative easing is coming back. They're going to be releasing trillions of dollars into the mortgage markets. However they do it, I don't really know. These various theories, it'll get done. Rates are coming down, and so the environment is ripe for appreciation of assets. And you looked at gold and silver, right? After the, back and forth between Trump and Xi, over the weekend, Friday close, gold was up, held its, 4,100 or level, whatever it is now. Silver touched $52, right? So obviously they're not really in this sort of like, Mag 7 tech correlation thing. They're really being purely valued on fiat debasement, whereas Bitcoin and crypto still have this connection to US big tech, which I think they'll shed at some point. But in any event, we know which way the world is going. It's more fiat debasement. those who have the foresight, who are looking at what's going on, they are voting with their money and they're saying, I want gold, I want Bitcoin, I want silver, whatever, I want stocks, Russell 2000, new all-time high, right? It's the same trade. We're all trading the same thing. I just think that crypto is the fastest horse.
Mm-hmm. Mm-hmm. Clearly, I think everybody understands that Bitcoin ties to the currency debasement trade. And I think the whole world is catching on to the currency debasement trade. I mean, even your everyday banker is talking about it. So I assume everybody's talking about it now. But so I think that everybody can understand that the Bitcoin eventually will tie more to gold and silver, to use that example as well. Does the rest of crypto also go that way because of the scarcity, or is it only Bitcoin that has the potential to benefit from the currency debasement trade?
Well, I mean, any cash flow, right? Unfortunately, most shitcoins have no cash flow and have no future of cash flow. If I have an infinite cash flow stream and I lower the discount rate, the terminal value goes up, period. That's true for an equity and it's true for a shitcoin project. So to the extent that your decentralized application generates real revenue, you plan to buy back your token or put emissions out there for token holders, that cash flow stream becomes more valuable the lower the discount rate goes, period. Mm-hmm. So just the same as equities. So yes, there will be certain shitcoins that do very, very well. The majority will not do very well because I think that 10 years on in this experiment of decentralized applications, investors are finally at the point of demanding to get actually some money from these things. And so the majority of these projects have no future of ever generating any cash flow, which is fine. That's what this game is all about. But yeah, altcoin season, you just throw some money out there and all of a sudden your altcoin goes up 100x. That shit ain't happening. You're going to have to be a lot more discerning in what you invest in to generate returns better than Bitcoin, better than ETH.
Mm-hmm. Mm-hmm. I want to be clear for a second that you keep using the term shit coins, and that's your term for altcoins, correct? Like, correct. Just to be clear, you're not actually talking about like the shittiest of the shitty coins, right?
They're all in the same basket. If it's not Bitcoin, it's a shit coin.
Yeah, exactly. Okay, thank you. That's okay. So just so everybody's on page with Arthur's language, because you have your own unique language. So okay, so macro looks really good. Let's talk about what does that mean for Bitcoin rest this year, and let's talk actually first this year. What do you expect to see for the rest of 2025? And then I want to talk about what you think beyond this year.
So obviously the thing everyone wants to know is what is this deal that Trump and Xi are going to get involved in? I don't know what it's going to be. Both sides will spin it as it was a positive development to their own domestic audiences, and then it'll be back to the status quo, which is China printing ever larger export surpluses. Right, the last month was another record high in terms of China's export earnings. So the situation globally is not really changing that much. But if you think about the American voters, they don't want a trade war. They're not happy about paying more for shit at Walmart. That's not really going to help Trump win an election. What's going to help Trump win an election is putting more brown people in jail using ICE, right? Americans love that shit. So he'll keep doing that. And then Canada, not Canada, but China, again, they're going to spin this as, we stood up tall for the Chinese people, and, we're doing good for China, right? And again, status quo. So I don't think anything is really going to change. But once we get over that sort of early November hump, then it's smooth sailing, right? Because both sides have done a deal, and so now they can both forget about it. And all the bad things because of these imbalances that are created in both economies can sort of be swept under the rug, being like, yeah, I dealt with that. We met, we have a deal, whatever that is. And so let's move on. And so what
happens if a deal doesn't happen in November?
Then, I think at the end of the day, the same thing will happen as what happened in April of this year, right? Trump talked tough and he had a taco, because at the end of the day, the financial position of America doesn't lend itself to being super aggressive in these sorts of things. And he's a master at sort of PR. He'll revert to status quo. And however he does that, and however he Jedi mind tricks his base, that is that the status quo is different than what it actually is, fine. That's, he's a true politician. He can do that. And again, the same. China still prints massive export surpluses. They still selectively restrict who gets rare earths. The U.S. pretends like everyone needs NVIDIA chips, and that's their crutch. And then we all continue to play the same game.
Okay, so the show goes on no matter what.
Correct.
What does that mean for Bitcoin end of year? Where do you think that takes Bitcoin
I'm still $250,000 Bitcoin. That's my end of year target.
End of year. I said 240 at the beginning of the year. So you and I we're in the same boat here. And do you still feel like that's likely? Like, where time is ticking here, can we really get there by the end of the year? What would be your probability on that?
I mean, 50-50, as much as any prediction that I make.
At least you're honest.
At least it's directionally correct, right? If we get there, we get there. The money is going to be printed. Every day there's another article which confirms, there will be more credit created, whether that's in the United States, in Japan, in China, in the European Union. They're all doing the same stuff. They're all tackling different issues in their respective economies, but the solution is always print more money. And so if Bitcoin double or more than double in 2 months? Absolutely. We've done it before, right? And if you're a believer of this, there's only so much Bitcoin on the exchanges, and once whoever wakes up and starts buying, it's just one of these charts because there's no available supply. Whatever you want to believe, So it's definitely possible. So we could definitely double in under 3 months.
Altcoins, not all altcoins go up. So obviously if Bitcoin goes to 250, then altcoins are going to do well. There's no doubt about that. What's your thoughts on, let's say ETH first and then the rest of the altcoins?
So yeah, I think ETH can go to 10,000 easily by the end of the year. I think Tom Lee is doing, Satoshi's work, going out there and proselytizing the unwashed masses about the bright future of Ethereum as held by the BitMine digital asset treasury company. So, he's red pilling an entire cohort of investors, which is great. I hope they keep buying stuff. But at the end of the day, right, the ETH story, ETH is still massively underperformed given where a lot of other layer ones have been this cycle. And I think it's going to play catch up. I still like the price chart and fundamentals of Ethereum doing, 10,000 by the end of the year.
I also like the sounds of that. Now, what's hard is right now there is loud voices on both sides because, and a big reason there's loud voices on both sides is the 4-year cycle, which doesn't have a ton of cycles to make it necessarily statistically significant. But for better or for worse, everybody in crypto loves to talk about the 4-year cycle. If that played out, then we would peak in Q4. Some people saying the top is already in. What's your thoughts on the 4-year cycle? So you think we're going to do well through the rest of this year, but how do you think the rest of this cycle plays out? And any view on how long it goes and when you might be able to see the top? I know the top is very difficult to predict, but are you believing that it goes into late 2026, 2027 even? What's your thoughts?
Yeah, so every 4-year cycle, and there's been 3, right, since Bitcoin's been created, have coincided with a change in price of money, quantity of money in the US and China. And that was a chart study that I did in my Long Live the King essay. So if we come to this particular situation and if we were adherents to the 4-year cycle, then we would say, okay, well, this cycle is essentially a derivative of the depletion of the reverse repo program at the Fed, which is $2.5 trillion. Started with Bad Girl Yellen in 2022, ending with Buffalo Bill Besant basically now. It's basically at zero. And so if you were in this 4-year cycle, they go, okay, cool. There's no more liquidity. That's empty. Where are they going to get all this new money to pump up the markets? Let's examine what is happening right now. So the Fed is cutting rates, and Powell said last night there have more cuts to come, right? And this is while inflation is above their target. The U.S. is printing 3+% real GDP. Unemployment is at historic lows for the United States at a post-World War II scenario, yet they're cutting rates. Okay. Inflation flying my ass. And then he said, oh, I'm a quantitative tightening's done. Motherfucker, you printed $5 trillion over the last 5 years, and you've reduced maybe the balance sheet by what? 2 trillion, something like that.
Not
I don't know
5.
what the number is. Not 5. So what are we talking about here? It is not time for quantitative. Your balance sheet should be 0. Talk to you when you're at 0, not when you're at whatever it is, 4 trillion, 5 trillion, whatever the Fed balance sheet is. So again, stopping quantitative tightening, quantitative easing is right around the corner. On the bank credit side, this is something that Besson has been badgering on about, that take away money creation from the Fed, put it in the hands of the commercial banks. JP Morgan announced recently a $1.5 trillion initiative. Most of that $1 trillion is based on we will lend more to American industry. Basically, let's help Trump drop more bombs. So we're going to build some more bombs. We're going to help you build some more bombs by lending some more money. Right? So if Jamie Dimon's doing it, then Bank of America is going to do it, and Wells Fargo is going to do it, Citibank's going to do it, because they're all lemmings. Jamie Dimon is a leader of all the large U.S. banks. So they're going to create more credit. So we have the Fed and the banking system forecasted to create credit. We have Trump talking about a housing emergency, wants to unlock, I think there's something like 10 trillion of home equity based on house price appreciation in the U.S. What he's going to do is going to convince the American public to spend their housing credit card on more gadgets, is essentially the game. So they feel good about themselves. Cool, whatever. Again, more money printing, more nominal GDP growth, more inflation. And if we move over to China, what's the message from China? It's, a reflationary story. They think that they want to be able to do it in a better way, not go crazy like 2008 and 2015. We'll see how she does that. But at the end of the day, they're signaling support for the housing market. It'll be tepid support. Support for social programs, and essentially reducing supply of goods, rationalizing supplies to get prices to go up. Again, this is reflationary. This is more credit being created in China. So we have the two major parts of the world forecasted to create more credit. And this is what's coming out of the bankers and the politicians' mouths. We move over to Japan. I can't pronounce her name correctly, but the new prime minister in waiting is an Abenomics fanatic. She wants to print more money, tell the BOJ stop hiking rates, and that's how she's going to combat inflation. You're just going to hand out checks to people. Again, it doesn't work, doesn't matter. More yen being created. And then if we move over to the European Union, if we take a look at how I forgot his name, the prime minister who left, then was reappointed. To get his budget through, he essentially had to throw out the pension reforms that Macron almost died on a political cross of a few years ago with a Gilets jaunes pseudo-revolution. He said, no more, we're going to scrap those age restrictions. I forgot what it was. I think they reduced it by 2 years or something like that. So printing more money. And this is France. They're so fucked. I wrote an essay called Bastille Day about how fucked their finances are. And they're going back on previous promises to sort of rectify the situation because nobody wants to go into austerity. Everyone wants to print more money. So we talk about the 4 largest economic blocks in the world. The politicians are telling us they're going to print more money. The banks are telling us they're going to lend more money to whatever it is the industries are that the politicians want them to lend to. This is inflationary. This is not like the other 3 cycles where you had credit contracting, you had the price of money rising, you had people talking about, inflationary problems. So again, this is why I think the 4-year cycle is not applicable in this particular situation. How long do I think it going? I think we top somewhere in 2027. And the catalyst for that is the rhetoric coming from Team Blue Democrat in the United States and any opposition party around the world, basically like, we have to do something about this inflation. Now, they're never going to do anything about it, but they're politicians. They have to campaign on the other side and get people to vote for them. And so the other position to take is, they're printing all this money. That's why your grocery bill is up 30%, but your wages are only up 10, all valid points. And that's what's going to scare investors. Maybe they're serious about it this time. Maybe they are going to do austerity. Maybe they are going to try to rectify, this Fiat debasement scheme. And that doubt will lead to a correction in the markets
in 2027.
That's my mental model. I'll update it as frequently as words come out of my mouth, but that's how I'm looking at it.
Yeah. Of course. What worries you?
Global war.
Anything
War is
keep you up? How worried are you about the current status of the?
Well, I mean, there's nothing I can
two
do about
wars?
it. There's nothing I can do about it. So you know that the risk exists. If I need to go Mad Max and start killing motherfuckers to survive, I'm ready. But I hope we don't have to get there.
Everybody listening is like, I hope I don't end up in the same room as Arthur if it's Mad Max.
You better hope so, because I'm going to eat. Don't worry about that.
Everybody is now terrified. So here's the thing: global war, like that feels like you said, out of your control, right? And I guess anything that worries you is going to be out of your control. Anything, I think the thing that everybody sits in the back of every investor's mind is, the classic, I don't want to ride into the next bear market, right? I don't want to round trip. A lot of people in the space have round trip before. They don't want to round trip again. But then at the same time, impossible to predict the top. Let's say your thesis plays out. Do we have another bear market similar to the past where we have big drop-offs? What is the next bear market? Are we in a totally different regime where the bear market could last longer? How do you think about the next bear market whenever that does come? And does thinking about that help you prep, or is it more just like you're like, it's so far away, I don't even need to plan for it right now?
So obviously I operate a barbell portfolio construction strategy. So to assuage that concern, you need to have the best brakes on your investment car. And so, I've talked a lot about, there's a fund that I invest in run by this guy named David Dredge called Convex Asia. It's probably, the smartest derivatives trader I've ever met. And not to say that you should invest in this fund. I'm just putting this out there as how I conceptualize this, right? So what is the trade that everyone, whether you're in TradFi, whether you're in crypto, we're all in the same trade. The trade is politicians do not want to inflict austerity pain on their populace. Therefore, any sign of recession or any wobble in the financial markets and these fractionalized leveraged financial markets, and every single country runs the same system, regardless of whether they're communist or capitalist or whatever, they're going to print money. And because they believe they're going to print money, I want to own government bonds, stocks, real estate, crypto, whatever, right? Depending on your own worldview and how you've been educated, and you believe in one of these or a combination of these asset classes. So we're all in the same trade. We all believe the same thing. We're just choosing a different horse to ride into the future. Now, what is the thing that would obviate this trade or would cause this hypothesis to be false? If politicians said, okay, we're going to allow credit destruction. If you're over levered and you can't service your debts because the cash flows are not there, bank, financial institution, industrial company, and you got to fire half your workforce, you got to hand over the keys to the creditors, and you no longer produce them of cars or bullets or whatever. I don't care. Free markets, creative destruction, all that kind of stuff, like 1930s style situation, Great Depression. We allow credit to contract 50, 60%, whatever. We remove all this waste out of the global economy. Then I would say, okay, well then I've got a problem, right? Because crypto, gold, all this stuff's going to go down in value in fiat terms because of all the credit destroyed, right? The denominator is going to get smaller, right? So what do I own on the other side of my portfolio that benefits from the systemic collapse and them not printing money? And that's essentially what I own in this other hedge fund, are esoteric volatility bets that I can never do myself because I don't have access to these things. This is what they do. The fund loses money pretty much every year, but I don't care because I'm making so much money on my other side. So because I'm protected on this risk-off scenario austerity and how much money I'm going to make on over here, I don't have to worry about it. I just go, as back up the fucking truck, buy all the crypto, buy all the gold, buy all the equities, buy all the bonds, whatever the fuck you want to buy. Because I know that if the politicians do the thing that I never thought they'd ever do, which is austerity, then all these other things that I'm buying over here are going to go up 10x. Yeah. And I'll make back the money that I lost on this other side of the portfolio. Now, unfortunately, the crypto's gone up so much that I can't buy enough of this other fund with the available cash that I have. But I'm not, whatever, I'm not worried.
Yeah. So even though you don't believe any politician could ever do austerity, you are prepared for the possibility that that could happen by investing in this fund. Is this a private fund?
Correct.
Could anybody invest in this fund? Or is
I
this
think it's a minimum $100,000 check, or I don't know. It's a minimum. It's for professional investors and all that kind of stuff, because they invest in some very funky stuff.
Interesting, very interesting.
But again, as a regular investor, you could buy. They're very expensive. Puts on the S&P, puts on whatever your favorite indices are. If you don't have the capital for that, then you just have to be a little bit very, very thoughtful. Like, okay, listen to what the politicians and the bankers are telling you. And usually at the top of every cycle, their tune changes. They start becoming and worrying about inflation or, whatever it is. And then it's like, okay, well, the zeitgeist is changing. Therefore, I should change my portfolio and, find something else to own. So you have to listen to what they're saying. There is no such thing as a safe investment, set it and forget it, all this kind of stuff, right? Mm-hmm. It's your capital. You should take responsibility for it. That's the whole point of this journey. And, be cognizant of that and make adjustments.
So well said. I'm going to end it there because that is just the perfect line to end on is, take responsibility for your own success and your own failure and for your own investments, because there's just no other way to do it. And that's why you got to keep tuning into us. Arthur, always a pleasure to get you on. Thanks for joining us today.
Thanks for having me.
Thanks for listening, everybody. Got to remind you, as always, not a today's financial advice. This episode is for informational, educational purposes only. Have a good, awesome day, everybody. We'll see you back again tomorrow. We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.